Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago. Today is Wednesday, October 15th. That's right, already halfway through the month of October, which is crazy. It just seems like we just started the year, but here we are pressing towards the back end of that. We got quite a bit of movement in commodity markets really this week, and a lot of it has been choppy trade. We've seen some continuation of bull markets. We'll get to that in a second. Before we do, I do want to remind you, if you have not signed up for a free trial of our daily commodity commentary, head over to bluelinefutures.com. From there, you can select the markets that most interest you, whether that be grains and livestock, precious metals, which has been just on an absolute tear here recently, energies, indices, etc. A lot of movement in a lot of different markets, and our team puts out a lot of great information each and every morning with regards to that. And then we have our trade desk here to lean on as little or as much as you need, whether you're trading on your own from our Blue Line Edge trading platform or working with one of our professional brokers. We are ready, willing, and able to help, so don't hesitate to reach out. Now that we got that plug out of the way, we can go ahead and get into some of these markets that kind of caught our eye in today's session. The first market, we got corn pulled up here, and we had a nice little reversal yesterday. 410 was the big line in the sand. That was the October 1st lows, and it looked like if we were going to break below there, there really wasn't a whole lot of technical support until that psychologically significant $4 level. However, we just tripped about a quarter of a cent, half a cent below that. Didn't find many stops, didn't find many new sellers, and were able to close back higher on the session, which kind of provided some more momentum to start today's trade. And then we got out above the 50-day, which I think kind of spurred some additional technical momentum through today's session. And now we're looking at potential upside resistance at the 20-day moving average and 100-day moving averages. Those come in between about 420 and 422. You've also got some trend line resistance coming in from there. So I think we could probably squeeze out a little bit more, but I think expectations probably need to be tempered. Volatility is very, very low. Potentially we break out, but temper those expectations. The 2-week average trading range for the corn market, about 5.5 cents. So if you're looking for a big 20-cent trade, maybe kind of reassess. And just take it day by day as these ranges continue to narrow up. Not just in the corn market, but you're looking at collapsing ranges in soybeans and wheat as well. So tempering expectations in the grains, certainly something to do as we chop around and trend mostly sideways. And as you can see here, we've got November soybeans trading mostly sideways this week, which all in all I think is really constructive. We had some concerns on Friday afternoon with regards to President Trump's tweet about trade with China. However, the market has kind of shrugged that off, and we're just kind of ping-ponging back and forth, not finding any real direction other than sideways. Potentially the market's waiting on more headlines with regards to China, but nonetheless, China really hasn't been in the market for U.S. soybeans, and I think that is kind of constructive considering where we're at. I would have thought that we'd be maybe under a little bit more pressure, but we are holding in well. $10, obviously psychologically significant. We tested $10 to about 10.03 a few times over the last 4 sessions. A break and close below there, and you're looking at this trend line support down near 985 to 990. So $10 is going to be a big level to hold to prevent another 10 to 15 cents of downside risk. On the upside, looking at the 20-day moving average, 10.15, that's the first hurdle to get out above to really kind of regain some momentum back to the cluster of major moving averages up here in the mid-1020s, and that's going to be your 50, your 100, and 200-day moving averages. And we will jump over to some markets that have maybe been a little bit more exciting. We'll jump right over to cattle. December live cattle continued to move quite a bit higher yesterday. A little bit more of a choppy session today, but still near contract highs. The cash market has continued to firm up. I think cash is probably got a little bit more behind it through the back half of the week, but I think futures maybe got a little bit too far ahead of cash, so I wouldn't be surprised to see some consolidation and maybe a little bit of a correction into the back half of the week. However, this trend obviously higher, so be very, very nimble with that. Options can be a great tool here, whether that be taking an outright position with options or hedging futures with options. Volatility, despite the big move that we've had here recently and despite the wider ranges, is kind of relatively low. So options are something to consider there. Then over to the metal markets, just continued strength there. Gold, another new high, over $4,200. Silver, basically at the overnight high from the other day. That's near $52.50. What I've been telling people and clients that I work with trading these metals, you've got to be very, very careful here. It's almost like trading feeder cattle. These ranges have just exploded. Looking at the 10-day average true range for silver, we're looking at about 2.25. That is a big, big swing. So if you're used to trading in a 25 to 50 cent range and you're used to trading X amount of contracts, that range has, 5X'd. So you're going to want to decrease your position size to give you some staying power and being able to manage these intraday and day-to-day swings. Options, again, can also be a great tool to help mitigate some risk. Put spreads, call spreads, etc., whether you're bullish or bearish. Our trade desk can help you put together a strategy with options and futures. So if you have any questions over that, don't hesitate to reach out. These are very, very exciting markets, and whether we continue higher or see sharp corrections in these metals, there's going to be a lot of opportunity on both sides of the market probably in the coming weeks. So if you've got any interest in learning more about trading precious metals, ags, livestock, indices, etc., don't hesitate to reach out. Remember, trading futures involves substantial risk of loss and is not suitable for all investors.